Potentially some sinister manipulation has been happening right before our eyes, and why on earth with the massive news that we had yesterday has Bitcoin's price only been going down? That's what we're going to be discussing in today's video, and jumping first of all into Bitcoin's price action. So we saw the breakout from the wedge, we pushed up, we found resistance. That resistance, as we spoke about, was a perfect time to take some profits from our trades, like I did here with $10,000 realized from the Dogecoin trade, and since then we have been pulling back. Now, what do I think is going to happen with Bitcoin? Well, the one thing that's making me feel a little bit uncomfortable in this market is, of course, the liquidation map. Now, the liquidation map shows us the majority, or more, let's say, people are long right now than short, with about $4.2 billion worth of shorts and over $11 billion worth of longs, meaning that this pullback hasn't been enough to shake out the late longs that came in up here. However, right now, you can see if we put in a horizontal line here, we are coming down to retest a very strong level of what was support and resistance right here. So nothing more or less than what potentially could be a bullish retest of previous resistance, flipping into a support to then go higher. All eyes really sit on about 87 to 89,000 to see if Bitcoin holds above that to really start this next leg to the upside. And you can see we have been somewhat putting in higher low, higher high structures here, and we did briefly break just above this resistance here. So on a technical level, I think this is looking relatively strong, and I'm perfectly comfortable with this current pullback in the market. Now, this current pullback in the market has coincided with some massive news. The biggest FUD we had a few months ago was MSCI potentially basically kicking out the likes of MicroStrategy from the S&P 500. Why is that bearish? A quick recap is simple. These companies like MicroStrategy dilute their shares in order to collect capital, in order to buy more Bitcoin. When Bitcoin's price goes up, the share of that company goes up, they dilute more, they buy more Bitcoin, and the process is rinsed and repeated, creating basically an infinite money glitch to buy Bitcoin and continue the demand for it. So as the supply goes down, the demand increases from this mechanism, all in all creating the perfect storm for Bitcoin's price to go up. But a few months ago, MSCI, who basically controls these indexes, which would be the S&P 500, for example, if included in the S&P 500, MicroStrategy would have automatic buying from institutions because, as you know, for example, I myself am an investor into the S&P 500. I dollar cost average into that every single month. Now, if MicroStrategy is in the S&P 500, I'm automatically buying it, along with all of the other people who follow a similar strategy, all of the people who have 401ks in America, ISAs in England, and superannuation in Australia, and so on in all the other countries. But the FUD hit the market as MSCI announced that essentially it was looking into the fact that maybe we're not going to tout treasury companies as, let's just call them normal companies, and actually they're something else and they won't be included. So what was the speculation was that the large institutions front run this news. They started to dump because they knew MSCI was going to either say this or actually put it into action. So they dumped their MicroStrategy and they dumped their Bitcoin. Why would they dump Bitcoin? Because they knew, well, if MicroStrategy is not included, this infinite money glitch that creates demand for Bitcoin would be null and void. And maybe the reason why Bitcoin went so high to 126,000 was actually because of this infinite money glitch rather than real demands. They were like, okay, well, I'm going to get my money out first. This was the speculation. However, right now, yesterday, we had probably the biggest news if this was really going to happen at any point, right? Probably the biggest bullish news. MSCI announced not to remove Bitcoin and crypto treasury companies from its indexes, but they did add a new rule. So massively bullish with a caveat. It's like the reverse of a silver lining, right? We got a big storm cloud or a big lovely cloud, and then it had a horrible little hidden gem that people didn't really notice, but this could explain why Bitcoin has gone down rather than up on seemingly bullish news. Well, when treasury companies issue new shares, MSCI will not add those shares or extra shares into the indexes. So from what I understand, essentially as the shares are diluted, they're not going to be automatically added into, for example, the S&P 500. So earlier when strategy and other treasury companies, as we discussed, used to issue new shares, big index funds had to buy some of those new shares. Now those funds won't need to buy the new shares anymore. This means the automatic buying demand has now gone, and it will be less attractive to issue new shares. The result of this will be less money raised through share dilution, and this is why markets are not going bonkers. So, still included in the S&P 500, but a spanner in the works of the infinite money glitch. That's the reason so far that we can see. But did Morgan Stanley actually pull off the biggest crypto manipulation we've seen to date? As you know, I think there's massive manipulation in the market, and we can see it, or basically front run it, by looking at this data. This data tells me that most likely there's going to be more of a pullback for Bitcoin. Maybe it comes now, or maybe we push up and then have this pullback. But using that data, I can basically front run, or not even front run, I can just understand and plan for a potential pullback. But the sequence of Bitcoin's October crash and January recovery looks like a planned setup. This is according to Bull Theory. So October 10 was the trigger. October 10, MSCI, originally apparently a Morgan Stanley division, announced a proposal to remove digital asset treasury companies from its global indexes. That included firms like MicroStrategy and Metaplanet, whose balance sheet hold billions of Bitcoin. This wasn't a small change because MSCI indexes guide trillions of dollars in passive inflows. Basically, the money goes in and then the infamous money glitch happened. If those firms were to be removed, pension funds and ETFs would be forced to sell, institutional exposure to Bitcoin would shrink, and liquidity would tighten. Minutes after the announcement, Bitcoin dropped nearly $18,000, erasing more than $900 billion of crypto's total market cap. I think that this also resulted in massive deleveraging event that annihilated one or many institutions. Now, the consultation stayed open until December 31st, meaning 3 full months of uncertainty. That overhang froze the demand. Passive investors avoided exposure. Index-linked funds were forced to sell. Price stayed weak. Sentiment collapsed. During this period, Bitcoin dropped about 31% and altcoins even more. It was the worst quarter of crypto since 2018. And guys, on that note, congratulations if you're still here and you made it through the worst market since 2018. You deserve all of the fruits that I believe will be coming in the future. Every horrible situation in crypto and Bitcoin has resulted a couple of months or a couple of years later in absolute amazing opportunity. And the only thing that I have ever said over a 4-year period looking back is I wish I bought more in that painful time. So if you're still here, guys, congratulations. Now, January 1st, sudden pump starts. From the January 1st, Bitcoin starts pumping without any bullish news. And the first 5 days of 2026, Bitcoin jumped 18%. That's a $7,300 jump. No one knew why, but somehow the relentless selling stopped and Bitcoin was printing back-to-back green candles. These were probably insiders who knew what was coming. Remember, we thought we saw insiders selling Bitcoin before the MSCI news dropped. I think it's very evident that there's manipulation in this market, but the 5th to 6th, the reversal. Then somehow in 24 hours, everything flipped. First, Morgan Stanley filed its own spot Bitcoin ETF and Solana ETFs. Then in a few hours, MSCI announced that it would not remove the crypto heavy companies at all. The exact rule that caused the 3-month sell pressure was suddenly withdrawn the same day Morgan Stanley launched a product that benefits from a recovering market. That's not a coincidence. Here's the full sequence to go over that again. MSCI threatens to remove indexes on the 10th. Crypto crashes and uncertainty for 3 days. Prices stay suppressed while institutions wait. Morgan Stanley files its ETF January 5th. MSCI cancels the removal threat January 6th. It's a clear pattern. Create pressure, accumulate at low prices, launch product, remove pressure, make money. MSCI controls index inclusion. Morgan Stanley controls capital distribution. Together they can influence how and when institutional money reaches Bitcoin, and the October crash wasn't just a market panic, it was a structural play. So, with all of that information, do you think it is a complete coincidence, Or do you think that this was a structured manipulation to make money? And my question is, if you are on the fence that I'm on, that thinks almost undoubtedly they're manipulating the market, because why wouldn't they? There's not regulation yet, and these aren't like good people. They're not out here to make money for us. They're out here to manipulate the market. So if that is the case, it would make sense to me, and I could be wrong because I'm just a random dude sitting in his room, it would make sense to me that these institutions want the price eventually to go up. Why? Because number one, they make money from fees. There's more fees, the more people who buy. The more people who buy and hold, the more fees they create. If the price continually goes down, people will not be wanting to buy. So create the product when the price is low, create demand as the price goes up, make money on fees, be incentivized for long-term growth and long-term excitement. Therefore, I believe that Bitcoin will sustain that. Also, my big money, my moves, what I'm planning for this run, as you know if you've been following the channel, and I've been doing this since the meme coin season in 24. So I switched up in early 25 here to focus on Bitcoin. It was always a focus on Bitcoin 50%, but to focus on the large cap cryptos. That's why I've been going long-term long on Solana, long-term long on Ethereum, short-term long on Dogecoin, and before this we were trading the likes of Sui, the likes of AVAX. Basically, my thesis is these big cryptos that are going to have ETFs, that are going to have institutional focus, are the ones that are going to make the gains. And I'm trying to find it here, but essentially Morgan Stanley here, Solana ETF. So Bitcoin, Ethereum, Solana. Why would I play against the big guys who have the power to manipulate the market and who are incentivized to make these assets, if anything, just go up slowly? Maybe there's volatility, but up and to the right is what they want, to create fees and to make more money. Not to make us money, to make them money. And that's what I'm banking on, and that's my thesis going forward. So I will continue to dollar cost average into Bitcoin, Ethereum, the likes of Solana, maybe XRP, and I'll continue to trade those same cryptos in the short, mid, and long terms. That's what I'm doing now. That's my strategy, and that's what I'm sharing with you guys every single day here on this channel. And if you made it this far in the video and you haven't yet subscribed, do me a favor, guys, subscribe. We're gonna make it out of this bear market together, and I'll catch you in the next one.